Is 8 really enough? Well, we're going to find out because stocks looking to make it 9 weeks up in a row as the S&P 500 now tries for its longest weekly win streak in nearly 20 years. Joining us now and where we go ahead is Ed Yardeni, one of the biggest bulls on the street, and, of course, the president of Yardeni Research. Ed, it's great to have you on CNBC and Closing Bell again.
Thank you.
Thank you very much for coming on.
Sure.
You've got a 5,400 price target on the S&P by the end of next year. Why the optimism?
Well, 5,400 by the end of next year and then 6,000 by the end of 2025. I think this is a bull market that has legs that's going to continue to charge ahead. The optimism is fundamentally based on the notion that we had a recession this past year, but it's been a rolling recession. The rolling recession actually started in 2022. And now as we look ahead here, we're looking at rolling recoveries in a lot of sectors that went into a recession. But the overall economy has proven to be remarkably resilient, particularly the consumer. And I think that's likely to continue to happen. I think what we're seeing here is a significant relief rally. And the relief is that we're not going to have an economy-wide recession. And the relief is that inflation, in fact, can come down without a recession.
Yeah, you just heard our segment with Sharon on the consumer and retail.
Yep.
1.1 trillion in credit card debt doesn't seem to matter, or maybe that we have the 1.1 trillion because people continue to spend. Are you shocked still at the level of just confidence the consumer is showing?
Well, they're showing it by spending. Obviously, if you ask people, they actually tell you that things are pretty lousy. But apparently, I've always had this view of Americans that when we're happy, we spend money. When we're depressed, we spend more. But there's money out there. People are working. Real incomes are going up. Wages are rising faster than prices. And I know there's this sort of alarm about all the consumer debt, but virtually all of that is paid off on a regular monthly basis. I mean, it's 22% is the charge on some of these things. So I think most Americans just use it for convenience sake. And consumer credit outstanding really never has had a good track record of predicting when the consumers would retrench. It's jobs. And if the job market suddenly collapses, then we'll have a recession. But right now, there's plenty of job openings.
Can stocks, because we know this, or at least I believe this, and tell me if you believe it as well, Ed.
Sure.
The stock market may represent the economy in some way, but stock market is not the economy. Economies can go down or stall, and stocks can go up, and vice versa. If we see the economy slow down a bit, can earnings still grow? Can multiples still grow? Can stocks still grow?
Yeah, well, at the end of the day, the stock market is a discounting mechanism. It looks ahead basically over the next 12 months and tries to determine whether the economy is going to grow, whether earnings are going to grow, or whether we're going to have a recession. I think the market's done a pretty good job of concluding that after last year's bear market, that was not justified by the economy. The economy looks pretty good. I think ever since October of last year and again in October of this year, the stock market's been discounting what I call an immaculate disinflation, the idea that you can have inflation come down without a recession. What people forget about is that there is a recession out there. It happens to be in China, and China is exporting a lot of deflation. And so they're doing us a great favor. Their economy is in trouble. And as a result, we're getting some real relief on inflation, particularly for goods.